好，欢迎大家再来到水星兔的频道。那今天简单来跟大家把上次这个我没有翻完的影片继续翻下去。那这一支影片它的中段就在讲很多人的策略其实没有到很完善啦，然后但最后都跑去怪罪心态对，心态背了太多的黑锅，成为很多这个代罪羔羊。那我就特别把那一段剪出来，然后后面还有一些他的策略的一些这个细节那就大家有兴趣的话可以再来看一下。那考试公式部分这礼拜没有什么太大的变化啦，大概就是 Apex 有稍稍的把价格调涨一下，现在变成29折。那除此之外，几家比较常用的Purdia 也没什么太大的变动，然后 TS 更不用说，很久没有推折扣了。那 TPT 的话 taiwanproptraders 一样我有 Medium 有写一些文章，如果你们已经打到 Pro 的人可以去看一下。然后 TPT 比较多人遇到的状况是他们在过考试之后，他的那个这个启动费并没有被折到。那如果你们确定是3月3号过后买的，也有用折扣码，那付启动费的时候记得去找 credits。 那如果 credits 没有数字的话，记得用右下角去敲客服，敲一敲之后就跟他说请他把这个补给你，那基本上应该就 OK 了。那 Tradeday 的话一样是大部分考试都是7折啦，然后 50K 的话会是65折，50K 还是有稍微便宜一点点。然后主要是看到它有蛮多的交易员已经在 Live 开始交易了，然后都被转过去，然后甚至有人已经从 Live 当中出金的。那最后一样提醒一下，如果你要买这些公司的话，这边基本上大部分都有折扣，我自己推的基本上我都有申请那个折扣码。然后你们如果是 Apex Tradeday 的话用 Taiwan， 然后 TPT Purdia 用 TW。 通常我的影片连结底下也都有那个注册连结，让大家就自己参考了有需要的话都直接加 DC 或加 Line 群问可能会比较快。好，马上就来看影片吧。
Every trade, win or lose, you should analyze, right? Take a step back. What happened? What did I do right? And if you on the value area plays and the IB plays that I do, if I lose those, it honestly it doesn't bother me because there's if I follow the rules of entry,
yes,
I dismiss it very quickly.
I think that's a wonderful message to have, because a lot of traders, in fact, even at the summit, I'm going to say this example again. I met a gentleman and he was confident that his technicals were great and he was just coming up for some help and advices on his psychology. So I asked him some questions on his strategy, and he was like 7-8 trades a day, doesn't use a stop loss, and it just felt like a very chaotic approach. Yet he and many others scapegoated towards their psychology. But when I see a lot of great traders in front of me, what I always seem to find is they rely on their data, they rely on their edge and a bit of exposure, and they get used to it, used to the feeling of being in a trade. Psychology often will take care of itself, because if you have firm belief in your system, a loss is just another day in the office, rather than you have to have these mental frameworks on how to deal with a certain emotion. Like I think there's more practical approaches to psychology.
But the great Peter Tuchman, who the Einstein of Wall Street, he said it best at the conference. He said, if you're using mental stops, you're mental.
Yep.
That resonated with me, because mental stops, I'm a firm believer in trading that if you don't have it written down on paper, first of all, you need that strategy written down on paper. You need the rules of entry, the rules of engagement written down on paper, the rules for entry, the rules for exit. Needs to all be written down. And when a trade doesn't go in your way, you should be able to instantly look at that paper and go, okay, I followed the rules, it just wasn't right. Or I broke this rule.
I want to ask about a sense of objectivity versus subjectivity, specifically because I think I heard you mention along the lines of, when I'm in the trade and it's a part of my plan, and again, you're marking your chart up the night before, and then you're seeing everything, price arriving to your level, you've got in based on your parameters, now it's a valid trade for you, you've taken it, and now it's not reacting as you want, so it's not giving the momentum that you want. I think you mentioned something like that. So therefore you have now, whilst you're in the trade, further decision making of, is this reacting as I want? Should I get out? Should I move my stop to break even, etc.? How much subjectivity and decision making should you have once you're already in the trade, versus someone that says, that's set and forget, just you're in, now break even, stop loss, or take profit. That's the only outcomes. How much do you modify and do further decision makings once you're in?
It depends on the confluence that I entered on, but if I'm confident in the confluence and there's nothing happening, and I'm not a fundamental trader, but I do have financial juice going, so I can kind of understand what's happening in the world. And if there's something rumbling over there on the news, I might kind of try to tighten things up on my trade. But if I get uncomfortable, one of the first things I do is I'm looking for the opportunity to get that stop to break even. I do.
It seems like based on stage and what I've heard you say a few times is your stop loss to break even is one of the strongest bullets you have in your chamber.
I am a defensive player. I defend the downside at all costs. And that started when I was working, on the Apex Trader Funding evals. You have the trailing drawdown, you have the trailing drawdown on the PA until you get past the threshold. And you always have to be in that defensive mode. Protect that drawdown, that drawdown, live to play another day, right? And it's way easier just to say you're wrong. I think Dale Carnegie, he always said, he had a saying about that when you're wrong, admit it immediately and emphatically. And the same thing goes for trading. And I think we can take some of the things that Dale Carnegie even teaches, from a social perspective and say, we can apply this to trading. And when you start to say, okay, I'm wrong, I'm out, I'm done, I'm tapping out, enter the huddle again, live to play another day.
Why do you think that is so powerful as a framework to have of absolute accountability with urgency? Why do you think that helps traders?
Well, I think it shows confidence in your strategy, because if I build out the proper confluence the night before, and I have clearly defined zones on a chart where are areas of interest where I want to trade. If price moves outside, if I enter and it moves against me, it's moved outside of those zones of interest, I need to admit I was wrong. Just get out. Don't DCA. Don't start adding contracts. You're wrong. It moved outside your zone. In other words, if price had never got to your zone, you wouldn't have entered where you're starting to DCA at. That is not your trade zone.
Yes.
You're wrong. Just get up. And the thing it is get up, walk away, come back, because in 5 minutes that chart's going to look different.
So when it comes to, I want to say, points of interest, there's various ways people can define their point of interest, whether it's a market structure supply zone, whether it's a fib level, support and resistance, a head and shoulder neckline, let's say. People always have their zones, and you've defined your own high probability zones from previous day volume and then the initial opening range. When you take a zone, obviously there's a probability of a zone, and I guess you have your data on your side. But then there's also an arm of precision, I want to say, which is your zone may be this big, but if you wait for a lower time frame rejection, you could take a zone to a pinpoint entry because you got confirmations. Let's say, for example, as simple as a doji candle.
Right.
Price comes into your zone, you get a doji. Instead of putting a stop below the whole zone,
right,
you put it below the doji. So it adds a level of precision, increases your risk reward if you're taking that route. So if you've got accuracy and better risk reward on your side. What kind of models, or are you using any models beyond just high probability zones to get that extra level of precision, a sharper stop, and also maybe using as a tool to say, here's my zone, it's usually valid, but I didn't get the rejection, so I'm not going to enter. Are you doing anything with lower time frame confirmations?
I like to. There was someone that taught me Fibonacci. Mike Perrigo's his name, and he always used the analogy. He said, if you have if you build out a zone on a chart and you have, let's say there's a previous day's open or close, and then you've got the value area low or high, and you got several things that are all kind of in this zone that look really, really good to you. Then you also want to look to see what soldiers you have behind that zone. So if you've got that built out, and then just behind that zone, there's a 61.8 retracement, there's a 78.6 retracement. Those are kind of the soldiers behind that zone. So you kind of want to, those are trades where you maybe enter and you maybe give yourself a little bit of flexibility because you know that it could potentially go down there and test that soldier that's backing you up, right? So you got to be a little bit careful. But I a lot of times try to draw my zones in a 50 tick range, which is my stop. So I know if I enter at the top and if it hits the bottom of my zone, I need to tap out.
Okay. I was just about to say that people have a zone and then they have other reasons below their zone that price could respect.
Yep.
And then you just find people that are just like enter here, and then they end up and then it's a bearish day and they end up losing on all of them.
Yeah, if you enter on first test of a zone, it's what we like to do. I'll set limit orders on, take for instance a value area play and the IB play. I'll set limit orders.
Interesting.
Because I'm confident in those zones.
So you have a zone, you set a limit, and do you have an expiration of, if I don't tap into my zone within X amount of time, I'll remove my limit, or you leave that limit the whole day?
Well, in value area, if price trends away from it, then obviously that play's done for the day.
So
or if you
open
up inside a value, that play's already done for the day.
True.
So you can write that one off. The IB play happens every day. That's a great play that you can watch.
Were you pretty much entering on a daily basis?
I will do the IB play every single day with a limit order.
How interesting. How interesting. Okay.
And it's pretty interesting. Some of the biggest IB plays I've done have been 80 to 100 points.
Wow.
And there's been 30 or 40 points on a wick. There has been instant rejection before.
Yes.
90% probability on that one.
This is something I want to explore because I am on the side of lower time frame. I go for quick, short moves. But I used to be a swing trader. And the reason I transitioned, well, there's a long list of reasons, but one of the main reasons was based on my own temperaments. I like instant feedback. I don't want to sit and ruminate, whatever the word is, to ponder upon an idea, because I might overthink it and mess it up and dollar cost average as people do, or get out too early because it was chopping around, etc. So swing trading, you might be sitting in the entry drawdown points for a week before it trends towards your target. Whereas when you are sharp in the intra-session side, it's tap and go, and you tap and go to stop loss or tap and go towards your take profit level, but at least you found out. And that's the way I satiated a lot of my psychology. How important have you found that in your own trading of, let's say, this tap and go instant feedback and sharp, accurate plays as opposed to big zones and let the market play out and leave the screen?
Well, what's interesting is those are the plays we all want. We want those lines on the chart where the wick hits it and you're in and it's running away. The challenge that we have is that I always say that I've only traded really two instruments in my career. I've traded the S&P, the ES contract, and the NASDAQ, the NQ contract. And I've always told people, I said, ES is like the girlfriend that your parents want you to bring home.
Okay.
NQ is the girlfriend that you want to bring home. She's the wild, flirtatious gal. The ES is the more docile, humble gal. And so sometimes on ES, it's a little easier to take those trades and have those little more pinpoint entries. Okay. But NQ can, it can be a little volatile and long wicks, punch through zones, front run zones, and things of that nature. And when that happens, you kind of, you have to adjust things. But again, it all goes back to what's in that zone that you built out. If that zone's just support and resistance, it may test it and punch through it a little bit more if it's going to respect it. It depends on what's in that zone. But if you got strong daily levels or 4-hour levels that are all set in that value area high or IB high, that's a huge trade to capitalize on. Got to look at the big picture. I'm always starting off on daily charts and pulling all of those time frame levels forward onto a 5-minute chart. So on my 5-minute chart, I have weekly, daily, 4-hour, and hourly levels, all color coded according to the time frame.
When you have your ranges and your points of interest, how important is overall high time frame trend to support that zone, or is it each zone is independent regardless of its pro trend or counter trend?
When you're talking a higher time frame,
let's say the higher time frame is, let's say the daily is overall bearish, but then one of your plays is giving a bullish situation. Would you still buy in a bearish trend?
So higher time frame zones always trump anything on a 5-minute. The only reason why I even look at a 5-minute is you can kind of fine tune your entries, right? You can kind of see where the candles are at, and maybe you can draw off some other lower time frame fibs or some small support and resistance that it might be respect on a 5-minute time frame. But I enter on 5 minutes just because it's a better visual. Maybe I can get a little more granular on that entry, but I really like to pull levels off the higher time frames. It's just hard for me to trade off of an hour chart or 4-hour chart with the way I trade.
Fair enough.